Good afternoon and welcome back to the NWR Virtual Investor Conference Series 11. I'm your host, Banjo Blake, and today we have joining Family Zone, ASX code FZO. Family Zone is an emerging leader in the fast-growing global cyber safety industry, aiming to support and protect every child's digital journey. The Family Zone ecosystem is a platform from which cyber safety settings, advice, and support can be delivered across any network and any device, offering a universal approach to cyber safety. Today, joining me is Tim Levy, who has been the Managing Director of Family Zone since 2014, leading Family Zone through its inception on the ASX in August 2016. Welcome to the conference, Tim, and over to you.
Great, thank you. Thanks NWR, and thanks everyone for joining the session. So, a massive quarter for us, which I'll touch on today, as well as what we announced yesterday, which is I think what will be seen globally as a bit of a game changer for our business and potentially a turning point for online safety across the globe. It's our merger with a Spanish-based but English operating company called Custodial. So let's get into it. For those that don't know much about online safety traditionally was seen as kind of home parental controls and school filtering. And that industry has grown wildly over the last 6 or so years, driven by a few things. Technology has enabled us to do things, incredible things actually. We allow teachers to open up and close tabs on kids' screens, to message kids in the classroom, to engage with their parents. We have technology that allows us to literally see what kids are typing on their devices and intervene when kids are at risk of self-harm or harming other people. It's what we are capable of doing now is phenomenal, and on the back of growing concern and growing regulation, duty of care regulations around schools, what we've seen is a merging of these previous separate concerns or separate markets, or in fact you could think about them as separate budgets within a school. And so what used to, in the US context, for instance, maybe 6 years ago, be a $350 million addressable market of content filtering in schools, today is well north of 1.5 billion and only growing. And now we're finding in the US a lot of private equity firms are coming into this space, seeing a couple of really interesting things: access to public funding models, recession-proof, inflation-proof pools of funding, and a massively expanding series of value-added products within these institutions. And now everyone in our industry is starting to see parents as an opportunity, and then of course big data. Big data is really driving the private equity investors into our space. And so we do see, we very much see us competing at the coalface of online safety in schools and parents, but we also see our competition as corporate, as global, as trying to access talent and technology and competing businesses inside our business. Now, our vision has been really consistent since 2016. We talk about this universal or ecosystem approach to online safety, with the child at the middle and all of the custodians of a child's digital experience supported. Well, each section of this diagram is actually a budget or a concern. It's a product set, in fact, of ours, and we've been very deliberately building out the world's most comprehensive suite of tools. We've got the leading filtering tools in schools globally, the leading parental control products. We'll talk more about that in a moment. Leading safeguarding products, which literally intervene and save kids' lives every single day. Leading educational programs, and building out with our partnership with Google, the world's leading analytical services inside online safety for schools. So very purposefully building this platform through a combination of acquisitive means and organically. We see this as a key competition for our business: best people and best products. Now, this strategy is working. We, in 2019, really essentially entered education in the US. We've now got more than 15% of school districts in the US using our products, more than 55 million of recurring revenue, and growing in the last 6 months equivalent of about 45% year on year. A net revenue retention, which is a key SaaS measure of how valuable are your products. It's what it is, a measure of how much incremental value you're getting out of your existing customer base, is more than 110%, which is an amazing stat for a SaaS business of our scale. Less than 3% churn in our business, which again is amazing. 82% service margins and only increasing. And our average revenue per student license, which is a kind of key unit in our business, is going up every single quarter. So our kind of mission to build out this broad set of products and have a product market fit very clearly we are, right at the top of the game in our industry. The other thing I'd like to, I think hand on heart I can say, is that our acquisition strategy is working. 6 successful mergers, and we can now hand on heart show that we integrate well, we buy well, integrate well, and then cross-sell well. We merged with Smoothwall in, I think it was August last year. We've increased our recurring revenue by $15 million in that period of time, which is more than the recurring revenue that was in our business when we acquired Smoothwall. That's phenomenal growth. And we've done that through improving our quality of our products, focusing on existing customers, and layering services through these customer bases. It's literally been outstanding. And that's also given us the ability with this scale to have operating leverage. Service margins of north of 82% means, we're really at the top in the market. We've got levers to pull to grow. And in time, as we get to that inflection point, which isn't far away, every dollar of revenue that we add, 85 cents drops to the bottom line, which we can reinvest in further growth. The other thing that's important to think through when you think about Family Zone is our English. We're very much an English-speaking organisation. We focus on the UK and the US markets mostly, and that strategy is working. We're dominant in the UK, and we're clearly dominating the US. All of our competition are actually growing in the US, which is interesting, because what I said before, all these additional kind of budget pools get accessed through the technology that our industry now has access to. But we are winning market share at a pace, and against the leading providers, we are absolutely beating them all. So right now, that's still a big opportunity for us. But into next year, we need to start thinking about non-English speaking markets, and I'll talk a bit about that in a moment. Okay, so this is the other big thing that's happened this quarter. This is a deal that I've been working on since March last year. Sorry, not March last year, since December last year, Christmas Eve last year. The man here in the middle, Eduardo Cruz, who's seen as a luminary, an expert in online safety, analytical, super smart, very well connected, has run businesses in the US. Josh on the right-hand side is American. Jose is an embedded security expert. This guy in the middle, Eduardo, called me in December, Christmas Eve last year, and said, Tim, I'd like Family Zone to buy us. Imagine that, the leading parental control provider in the world rang us and said, this thing that he's been working on since 2012 with his best friends, with 81 committed staff, that's seen as a leader in the space. He sees us as the right home, the right family, if you will, for the future, for his legacy, for his team, for his passion and vision. And in fact, everything that he's built. He came to us and said, I don't want $1. I want to go along for the ride. I want to get shares for the investment of our business inside Family Zone. Now, he did this for a couple of reasons. He, like us, understands that the online safety landscape is shifting, and for a truly effective approach to online safety, you need to form a partnership between schools and parents. Custodial had started that journey about 18 months ago, but for them to scale up to where, say, our business is, they need to raise money or they need to partner. And he saw us as a very likely partner. But in particular, what he saw, which I think convinced him that we're the place to go, is what we did with Smoothwall. So we acquired Smoothwall in August last year and have done an outstanding job. The whole industry recognises it as quite remarkable what we've done there. Retention rates, renewal rates in Smoothwall went from 85% to essentially 100%. We've cross-sold their products into America and saving kids' lives every day, and are taking the US market by storm. The achievement of what we did in Smoothwall cannot be spoken about more highly, and it's the thing that brought Eduardo to us and said, this is where I want to bring my business. A bit about Custodial. So they've been around since 2012, so 10 years. Parental control predominantly, certainly for the first 8 years of their life. It's probably the parental control product that we would have built if we'd focused on parental controls when we launched in 2016, albeit in 2017 we started to move into education. It's the most resolved product. In your language, it's probably the most user-friendly product in the world in terms of parental controls. It has things that we don't have, and we have things it doesn't have. I'll touch on those in a minute. 16 million of recurring revenue, growing quite strongly, and it's profitable. Now, the thing that's quite unique about their business is is they really are a global provider. They're unusual in that sense. They're the only people that we come across globally that sees themselves as a global operator, not just focused on the English-speaking markets. They have customers in well north of 100 countries. They've got telco distribution deals, including this exclusive deal with Singtel, across 10 countries, and they've got support for 9 languages inherent in their product. That's a really interesting opportunity for us as we start thinking outside the English-speaking world. So we have a parental control product. So why would we do this? So this slide shows you how our two products line up. And really what the message of this slide is, we're clearly better together and we're clearly miles ahead of the competition. We all do content filtering and routines and calendars and so on. They allow parents to manage time, limit your kid to an hour of Facebook a week. We allow parents to control things like the camera and iMessage and so on. They can do call control and panic buttons. And we'll have home networking features. Ultimately, the big difference that's going to really drive uplift in revenue for us in the next couple of years is we've got 11 million students we can start selling through, 24,000 schools. And then they have a global footprint, multilingual support, telco distribution. That will be the next leg of our growth at the back end of 23 as we start finding partner-led approaches into the non-English speaking world for schools. So this is the rationale, and you probably picked it from this session so far. This is the reason why Custodial is such a game changer for our business. It gives us a highly resolved product that's well known in the US market. There'll be many people in our school clients today that use this product. And we'll now, probably by about August, we'll be linking that into our schools platform and launching that through the US market. We'll then be following that up in the UK. In 23, we see our businesses really starting to address the needs, these same needs that are apparent in our markets that are outside the English-speaking world, and Custodial is the right platform to do so. The other great thing organisationally for having this team in Barcelona running this business, they operate in English, they're very skilled, very well organised, and they know the consumer market inside out. They can be dedicated to that product. And hiring engineers in Spain is about 2/3 the cost of Australia and about half the cost of America. So we can provide very effective, focused, cost-effective focus for our consumer products in Spain. Obviously, we get more features, the combination of these two great product sets, and there are operating efficiencies that will come through the bringing together of these two substantial businesses. Together, we present as a massive company, clearly a global leader, in fact, the most strategic asset in online safety globally, and with a capital raising, which we hope to announce tomorrow, fully funded. So it's a really exciting position for our company to be in. Let me just quickly touch on the deal. This is the slide that went out to the ASX yesterday, but I won't talk about it in that detail. These are the highlights. $52 million acquisition US dollars, which works out about 4.5 times ARR, which is about normal. It's not cheap. It's not expensive in the market for SaaS businesses. But what makes this thing special is two things. Well, firstly, tranche one is 2.25 times revenue up front to the investors in that Custodial business, which works, and included in that is $10 million of vendor finance through a con note convertible at 60 cents. So that's pretty attractive terms. But tranche two is an earn out to the founders. So the founders have only taken shares, and almost all of that earn out, so $35 million, is converted to shares subject to them hitting real business milestones, and will most likely be converted at 60 cents. So these three guys who know our industry better than probably me, in fact, most people on this call, they're putting in $35 million into Family Zone at 60 cents, effectively is the way this deal works. And the last price for Family Zone trading is 41 cents. So that's a massive acknowledgement of our company. It's a massive feather in our cap, and it's a real indicator of their confidence, not only in us as a business, but in the potential of bringing these two businesses together and selling Custodial through our school footprint. That's me. That's my quick presentation. So questions?
Perfect. Thanks a lot for that, Tim. It was great to get an insight into the new acquisition. On the acquisition, I've just got a question that's come through. How's the acquisition pipeline look? With Custodial in the tent now, do you view your platform as fully featured, or are there other competing or complementary platforms out there of interest?
Yeah, good question. Look, I think by and large, it's complete. That circle diagram that you saw previously was complete. There's, in our industry, as you get into the outer bounds in data and analytics, machine learning, AI, analytics type tools, there's these speculative technologies that are being built. Most of them are kind of, if not pre-revenue, they're certainly pre-cash flow break even. And I don't think yet we're in a position to be speculating with those sorts of businesses. So that might be a next year thing. But for the moment, yeah, we're largely filled.
Can you comment on the potential for large district-wide US deals?
Sure. Look, we internally talk constantly about going up market in the US, which is, I think, where this question is going. So we've been tendering in state-based deals, large what's called managed service provider deals, and even in the UK, we've won a deal with the government of Wales, like for a whole country, with a preferred provider of filtering services. So that's an ongoing process. 2 years ago, I would have been announcing a lot of these deals given their scale, but given our scale now, so, a lot of these deals just kind of flow through and aren't worthy of being announced. So look, a lot of that going on. I might say though that those investors that are really hoping that we do a big statewide deal in the US, as good as that would be for a headline, those deals are typically price-based. So you're competing on price for the content filtering element of the school system, and then you have an opportunity to sell additional products down the track. We make more yield out of really focusing on these kind of 4,000 student up to 150,000 student opportunities, and that's really where we're focused. But yeah, we do get invited to tender in big deals, and look, I'm very sure some of these will drop in time.
Over what duration do you expect to achieve material cross-selling adoption into the US and the rest of the world?
Well, our cross-selling of the monitoring product, which we acquired from Smoothwall last year, is flying. I mean, it's quite unbelievable how that product's going. In between November and March, we added 200,000 users. There was 120,000 added in March alone, and we detected 106,000 incidents of toxicity in these schools. We saved, I think it was 40 kids' lives in that time. It's quite extraordinary, and added more than $1 million of recurring revenue to our business in that period of time through that product. So cross-selling, we can now hand on heart say that we're doing really well. The next big opportunity for us, which we think will kick off in August, is the cross-selling of that Custodial product into our US schools footprint.
Thanks, Tim. Can you comment on Custodial's customer acquisition costs as a standalone business versus what it will look like under a combined group?
Yeah, look, they don't manage, they're a very sophisticated organization. They don't manage actually to a cost to acquire, which might seem a bit strange to investors. They actually manage themselves to a customer lifetime value. And so, they'll find avenues, sources of customers that provide the highest lifetime value, and they're happy to invest in that. So that's how they run their business. It's very sophisticated. But overall, at a helicopter view, their cost to acquire a customer is in the order of $50 to $60 Australian. Our current cost to acquire a consumer customer in our Family Zone parental control product is less than $14. It oscillates between 10 and 14. Over time, as the Custodial product starts to benefit from our introductions, our school introductions, I'd expect theirs to come down to something like ours is.
Awesome. Thanks, Tim. That concludes this session. Unfortunately, we've run out of time, but appreciate giving us the insight into the new acquisition, and all the best.
Great stuff. Thank you. Thanks, everybody.